find more resources about feeding cows in confinement through a link on the Market Journal website. We also have a look at hog markets this week with Iowa State Extension livestock economist Schulz. Even with larger anticipated supplies and more animals on the farm, pig prices have continued to increase. The USDA currently expects 2017 pork production will be about 4% higher than a year ago, and its latest inventory report showed the most hogs and pigs ever on June 1st, with records dating back to 1964. Even so, the July lean hogs futures contract set a lifetime high with Tuesday's close over $92 per hundredweight. That mark is 33% better than the contract's 2017 low set less than 3 months ago. When Lee joined us Thursday morning, we started by asking why prices have continued to charge higher with the outlook for more pork in the future.
Well, there's kind of an old adage that higher supplies equate to lower prices, and we've really seen the hog market go against that axiom this year. And really, once you dig into the components of both supply, which we know are larger, but the demand situation, I think that points to why we've seen prices where they're at and why they are larger, even though we've seen larger supplies. Really, you have to look at the international trade. We're up 14% year to date through May of exports. Also, imports are about 3% less. When you really look at the star markets, 7% increase in Japan, 26% increase in Mexico, 1% in Canada, and 34% in South Korea. Now, what's been a bit of a drag is the China trade, especially when we look at it from a year-over-year standpoint. But remember, last year was large exports to China. So far, we've seen them down about 22%. And also about 16% down to Hong Kong. But overall, exports have been strong, and the reason why we've seen prices where they're at.
So where are per head margins right now?
Well, if we're looking at margins for farrow to finish on a cash market basis, we've seen the first quarter of 2017 in that $12 range. Second quarter was in the $17 range. Third quarter looks to be about that $34 range, really driven by what margins we're experiencing right now. And then back down to about, I think, $3 loss or so in the fourth quarter. That nets us about a $15 profit per head in 2017. If we fast forward to 2018, I think we're looking at still profitable margins, but back down to that $1 to $2 range.
How strong are prices for isoine and feeder pigs?
When we look at prices for, particularly the SEW 10 to 12 pound pigs, we're about $5 higher than we were a year ago at this time. Really important to understand the market for when those pigs are going to be finished out and hit the market. SEW pigs, we look about 6 months ahead, so we're looking at about the lowest prices from a seasonality standpoint in those. If we're looking at the 40-pound feeder pigs, August typically is the lowest prices. I think if we're looking at the feed situation in particular, seeing that corn and bean prices have increased as of late, I think that's really where we're going to see the first impact on the hog market is if we continue to see those prices higher, really due to the weather situation we're experiencing, we could see that first impact on the wean pig and feeder pig prices. So far on margins, we haven't seen much of an impact, maybe $1 to $2 on the cost of production. What's really offset any of that is the increase in lean hog prices.
Did June's inventory report contain any noteworthy signals to you?
Very few surprises in the short run. If you look at pre-report expectations, we were all within the range except for one number, which was the March-May sows farrowing. That came in about 1.5% larger than pre-report expectations. That does have implications longer term, though. We've really missed the mark on those sows farrowing when we look at the intention estimates. You have to go back to 2015, March, May of that period to see a time we've actually seen lower actual farrowings compared to the farrowing intentions. What that suggests is we'll continue to see USDA revise upward those sow farrowing estimates. And so I think what that means is pig crops could be larger than we expect. And if we're looking at where this could occur bearish on the market, I think is looking into fourth quarter potentially of 2017 and first quarter of 2018 if we have those larger pig crops, especially in the June-August period.
Parlay that answer into where you see prices going overall here for lean hogs.
Look at the third quarter of 2017, and we're looking particular at the Iowa Southern Minnesota negotiated series. 74 to 79 for that third quarter, back down to 58 to 62 for the fourth quarter, back up to 62 to 67 for the first quarter. And I think as we get into the second quarter of 2018, we're in that 69 to 73 range.